Hello everyone and welcome. My name is Tim from the Cam Compound and it's time for another technical analysis video. I have Bitcoin US dollar on the 1 day chart right in front of me and let's get right to it. Alright, for starters we can look at the market and immediately with just one glance say it's kind of boring right now. We just managed to break our resistance here around 19,500 yesterday. However, low volume, not a whole lot happening in the market at the moment, and we broke back under. Of course, we still have 7 hours before the day close, but this is not a great start. Basically, not really managing to confirm unless something significant happens over the coming few hours, which is unlikely because we're slowly moving into lower liquidity timeframes. Now, this is very good for something else, which is one of my favorite strategies, dollar cost averaging or DCAing. Because, well, we've been here for 2 months now, right? Approximately. June, July, longer even, far longer. We've been here for since 2 months. Since like the break back from 25,000 approximately. But this is a great moment to be accumulating a little bit heavier and a little bit more than usually. You can either do this in levels, like you set $1,000 to buy in at 20,000, 19,000, 18,000, whatever, or you just buy a little bit every week or every month. And generally speaking, that is a great way to get out ahead of most market participants over the long run, which is kind of what we're focusing on. Long run is most important. Right. So that is a great way to go about it, especially since we still have the risk of a further global economic meltdown. It's still pretty much in the cards. So having your orders ready or having a plan ready to take full advantage of that is super important. Right. That having said that, let's go into the 4 hours, see what we can expect there. You see a clear rejection from above 19,500. Came back down on heightened volume, so now we're back in the range of the upsloping trend and the resistance, meaning that we could bounce along like this for the coming couple of days and then either break out upwards to try and break the 19,800 and 20,500 again, or we move back down and we go back to 19,000 and then probably further down to try and test 19,000 or 18,500. That is basically it for Bitcoin at the moment. It's incredibly boring. We're stuck between, well, the 19,800 mainly and the 19,000 for, well, about 2 months, like I said. So that is something to kind of tough through, especially if you are more of an active trader. You could go a bit out of the risk curve, seek some altcoins out. But for now, this is perfect for accumulating, for preparing for the next bull run, which is super important. This is where your foundation for the next bull run comes from. Then, if we go over to ETH USD, then here you can see, let's see here. There are some opportunities for shorter manual trades. As you see here, this went decently. I believe it just stopped me out and break even at one-on-one. But that doesn't matter. That's all fine. So we see here on the 4 hour that Ethereum had a clear narrowing pattern, which generally means it's about ready to break back down. With very narrow patterns, it's a bit tough to gauge sometimes, but you see also that there was the previous high here, and from that point onwards, the wicks started to become really high and more frequent, and even the lower wick didn't really manage to break through the resisting trend line afterwards. So that's a clear sign that things are not really going as smoothly, and then that up here you can probably have a decent shot for a short, which is what happened. Great. For the rest though, we see that Ethereum is having some trouble. Currently it's hanging at its 50 EMA. If that breaks, we'll probably move back down towards here, towards 1275, right about here. We might just test 1250 again, but this seems to be a very strong area as of right now. If we zoom out a bit to the daily chart, we do see that this trend line has been broken once again, and that kind of lowers the chances that we'll go all the way back down to 850. On the one hand, a shame, because it would be very nice to pick up some Ethereum at, well, 850. On the other hand, it's alright. If we can start to build a foundation to, in a couple of months, like we talked about in another recent video, how long it might take for the market to start to recover, then we still have enough time to make the most out of this range and prepare properly. So no hard feelings one way or another. The rest of the market is basically the same. If we have a look at Matic, that's actually doing decently today. It's not really managing to break its previous high, so we might see a further move down. That would not be too surprising, actually, because, well, the rest of the market isn't moving with it, so it's very hard for Matic to keep up the momentum unless something very big has happened in its ecosystem. It is still above its trend line, though, so it could just come back and bounce back up, but unlikely for the moment. Curve is also, Curve is actually holding above its support fairly well, which is nice to see. Let's have a look at Solana, for instance. There we see that Solana is already back at its trend line. Would not be too surprising to see that break back under and go towards 28, 29 again, especially if it manages to close under the open of yesterday, in which case you'll see an engulfing candle, which is generally a fairly strong bearish signal. Volume is also, well, it's not great, but comparative to yesterday, it's at least about on the same level. There's just not a lot happening in the market, and that's okay. These moments are necessary too, so that when the volume picks up, that we can recognize it and we can see it like, hey, now something is happening. In the back end, like in the on-chain part and in the derivatives part of the market, we can see that there is pressure building, so a bigger move could definitely be in the cards over the coming weeks, but it's not really showing that it's ready to break out yet. So for now, we'll just have to deal with the low volume, with the lower trading opportunities, and with the good opportunities to scale in over a longer period of time, which is still fine. Let's look at Link for the last one, or AVAX. AVAX is good. So we have that open, if I'm not mistaken. And AVAX we see as well, it broke above its resistance and now it's back under. It's kind of following the rest of the market, but that is not too strange. Alright, thank you so much for your attention, as per usual. Hopefully you've learned something, and if you have any questions about this whatsoever, feel free to follow the link below towards our Discord and just send me a message. Ask me anything you want. Alright, I'll see you in the next one. Bye bye!